This is Golden Years, a roadmap to navigate retirement with Mark Cordner, the podcast.
Nationwide is canceling around 100,000 pet insurance policies due to the higher costs of veterinary care. And now these pet owners find themselves without coverage. So while you may not have a pet or a pet to insure, you might find yourself in a similar situation in your 60s when a term life insurance policy expires after 20 or 30 years. So it begs the question, when you get to be 60, 70, what have you, how much weight does life insurance really have in your retirement income plan?
It's kind of funny timing that you bring this up. I literally had a communication this morning with a 72-year-old client on this topic. We had done a 20-year term insurance plan for him when he was 52, and I don't know where the last 20 years went, but suddenly his $11,000 a year premium jumped to $44,000, and it will continue to escalate every year hereafter should he choose to keep that plan. And so that was his very question to me. Do I really need this? Now, in his case, he's worth tens of millions. So I'm not sure that he necessarily needs it per se in the traditional sense that, most of us bought life insurance when we were young so we can pay for, make sure the kids were in diapers and in groceries and in, school and sports and staying in the neighborhood kind of thing. But as we get older, interestingly, the reason why people buy life insurance in their 50s, 60s, and 70s, and we have a lot of people who are doing that. It's a big part of my work. The reason they buy it in their later years is entirely different than why they had it in the earlier years. So this gentleman who's worth many, many millions doesn't need life insurance to, take care of his family in the early sense. But now we can use life insurance in different ways. And so I think of three things immediately. One was, in the early days when we were young, we bought life insurance to replace lost income so that the widow and orphans would be taken care of, as it were. Well, in our later years, when one spouse dies, there's going to be an automatic reduction in the household Social Security income, typically at least 1/3. Often there's a reduction in pension income. And so life insurance to replace lost Social Security benefits or lost pension benefits is still a very important consideration. So that's one reason people will still buy it. Another reason people will buy it is because when structured properly, it actually becomes like a supersized Roth IRA or can. Life insurance can be a great tool for growing, accessing, and transferring money on a tax-free basis. And that was one of my points to this gentleman, is that even though he doesn't need to create more assets per se, at his stage, he now needs to think in terms of how can I most efficiently pass these assets that I've built up over the years? How can I pass those values to my children and grandchildren most efficiently? And life insurance is an incredibly efficient tool for the passing of financial value from one generation to another. And then finally, the third reason is a surprise to a lot of people, but it is the simple fact that the insurance industry has stepped up to the plate and they have revised life insurance policies over the last 10 years. So the people who now buy typically what we call permanent life insurance, they can use the life insurance death benefit for themselves while they're alive. So in other words, if you develop a chronic condition that prevents your ability to, what we call long-term care, that prevents your ability from dressing, eating, toileting, bathing, all these kind of basic activities of daily living. If you can't do those things for a period of 90 days, these life insurance policies will allow you to tap into the death benefit for yourself. So it's not just a death benefit for someone else. You can tap into the death benefit for yourself on a tax-free basis to pay for the caregiving services that most of us are going to need as we age. It could be frailty, it could be illness, it could be an accident, but there's a variety of reasons why 3 out of 4 Americans are going to need hands-on assistance as we get older. And life insurance has become a phenomenal tool to pay for that, because you could use half, for example, of the death benefit on yourself while you're alive, and whatever portion you haven't used, that other half will still pass on to your kids. So you're always going to get more back than you put in. But they've become incredibly flexible tools with long-term care planning in mind. And frankly, that's where most long-term care strategizing has now, in terms of the funding, how do we fund, how do we pay for that long-term care? Life insurance has become a great tool for that. It's one of many hybrid approaches, but so yes, there are lots of reasons why life insurance may still make sense in your retirement years. And the invitation I'd give to our listeners is, if you have a life insurance policy that's more than 10 years old, come visit with us, because odds are you can often exchange that for a newer policy that will have these new benefits. And often you can do that without incurring any additional charges. The kicker is you got to be in good health still. But if you have a policy more than 10 years old, come talk to us. There's a very good chance we can upgrade it without out-of-pocket expense to you and put you in a far more safe and comfortable position as a result. So come visit with us and we'll have a complimentary review. We can review your plan. I do this a lot. Matter of fact, I had just a couple appointments this last week where we were reviewing people's policies that they had purchased years ago. And although we weren't replacing them or doing anything with our company, we didn't generate any money for our company, but we did these courtesy reviews for them. We got the other companies on the phone. So we'll do a free analysis for you and help you determine if it makes sense to keep those policies, or if you may want to look at something that might be a little more modern, multi-purpose that policy the way these new plans do. So It's not just about death benefit anymore. There's income considerations, and there's certainly long-term care considerations.
It is pretty much everywhere. You know it by AI, right? Artificial intelligence. It is at our fingertips pretty much everywhere you turn around. Recently, I just went through a fast food joint and there was an AI person taking my order. It threw me off. And then I felt weird going, actually, no, I don't want the large. I want the medium. But it corrected itself for the most part. And then it threw me off when I got to the window and a real person gave me the food. I just thought, okay, if you're here, just answer the to-go thing. Anyway, I digress. My point being is that it's everywhere, anywhere. And Google has added some AI features Google has added some AI features that summarizes search results at the top of the page. But be careful. Don't believe everything you read. Some are just flat out wrong, like suggesting you eat one small rock a day because it's a source of vitamins and minerals. Take
Ouch.
that with you. Yeah. Number 2, putting glue in pizza topping to add tackiness. What are people doing?
Thanks.
Yeah. And then telling you that astronauts have met cats on the moon and they played with them. So listen.
There's a conspiracy theory.
There is a conspiracy. Listen, we sent animals to the moon first. Who knows? But all I can say is, pick and choose what you believe when it comes to AI. It's happening because AI doesn't necessarily know what's true or anything else. It just knows kind of what's popular. And there are also AI tools that can help plan for your retirement. This literally blows me away that somebody would put AI, artificial intelligence, of making decisions about their money in general. I don't care if it's $20, much less their retirement. And please tell me you have never encountered someone that said, well, I was working with this AI robot, but decided to come to you, Mark.
Well, we haven't quite got there, but I've met a lot of people who consult with Dr. Google, and Dr. Google gives all sorts of crazy advice.
Sure.
There's a favorite quote that we have from T.S. Eliot that's on some of my firm's literature, and it basically says, where is the wisdom that we have lost in knowledge, and where is the knowledge that we've lost in information? And the point of this question is really, it's not that there's any dearth of information. In fact, there's an excess of information in our time, but what we've lost in the course of that is the wisdom, and that's where we need the human component. We need advisors like myself who have been around the block many, many times. In my 32 years, I've spoken to hundreds and hundreds and hundreds of families, and I've seen things and picked up things, practical issues, as well as just the financial knowledge that comes from thousands and thousands of hours of studying, as well as the practical implementation of that. So I think we've really got to be careful with the internet. And there's a corollary here, that if I can touch on it, and that is we have the same problem with the financial media. They just regurgitate what each other has said, often without understanding what they're doing. I think there's some real risk to people watching financial media. And these financial media types are always trying to get us excited so that we'll start trading in our accounts and generating fees that just benefits Wall Street. In other words, they're advertisers, and so they're compromised. So many of these financial media types are at the beck and call of their advertisers, and the things they're saying are not only not in your best interest, but they can be flat out harmful, especially when you start listening to some of these big name people who are giving these size 10 fit all kind of advice. It's flat out wrong. I mean, some of these things that, and I won't name names, but some of these people that have rabid followings, particularly in church communities, they give advice over which I'd lose my license, frankly. I mean, it's just pure malpractice. And so we just have to be really, really careful there. And one example, we were just talking about annuities for a minute ago. There's a lot of really negative stuff from some of these big name gurus about annuities. And it's really, to me, tragic because they have harmed people who have gotten out of annuities at great cost sometimes. And it all boils down to them criticizing annuities for not being, for example, mutual funds, for not being something that they were never intended to be. I mean, it's as stupid, frankly, as criticizing a boat for not being a plane. They're two entirely different instruments. And anyone who would criticize a boat for not being a plane, we would immediately dismiss as being crazy or ignorant. And yet we embrace so many of these financial people who speak in these certainties, this black and white kind of sense that all these things are evil and all these other things are good. And that's just simply not true. And I'll finish with this. I mean, if you simply look out on the roads, you see all sorts of automotive vehicles. You know, there's pickups, there's vans, there's sedans. I drive an SUV. There's all these different options. Each was created for a different purpose. Financial vehicles are the same way. While a van may not be the appropriate automotive vehicle for you, a pickup certainly is not for me, it doesn't make them bad. They may be ideal for someone else. And so it brings us full circle. We got to be careful with the internet and with AI because it gives out flat advice as if, you know, it's gospel truth, when in fact it's not. Many of these things are incredibly subjective, and that's why we need the human advisor in there. The human advisor can hear you. The human advisor can understand you. He can understand beyond the words that you're using often, or she. The female advisors are often even better than the guys. They listen better sometimes, I think. But it's really about hearing what it is that the client's trying to accomplish and being able to hear beyond the words that they're using, because the words are often misused inadvertently. So you got to have the human element in there. We can't rely on Dr. Google. It's not about information, it's about wisdom. So if you want a wisdom experience, if you want a real person experience, we say come visit with us. We will take you through a process that will open your eyes to where you're at financially. There's no cost for these consultations. We invite you to come in and we'll have a conversation and we can bring clarity that you will not have had previously.
Investment advisory service is offered through Golden Years Financial LLC, a registered investment advisory firm. Insurance is offered through Golden Years Insurance Services. These firms do not provide legal or tax advice. Consult your own legal and tax advisors before taking actions that may have tax implications. Investing in securities involves risk, including the potential loss of principal. Insurance contracts principal protection is based on the claim-paying ability of the respective insurer. None of the information contained on this website shall constitute an offer to sell or solicit to buy a security or insurance product. The information and opinions contained on this site or requested from this site are provided by third parties believed to be reliable, but accuracy and completeness cannot be guaranteed. They are provided for informational purposes only and are not a solicitation to buy or sell any of the products mentioned. Any media logos and or trademarks contained herein are the property of their respective owners, and no endorsement by those owners of Mark Cordner, Golden Years Financial, or Golden Years Insurance is stated or implied.